In the previous video, we learned what ledger accounts are and why accountants use them. But here's the big question. After recording a journal entry, what happens next? Do we just leave it in the journal forever? The next step in the accounting cycle is called posting. This is another important step that comes right after journalizing. And that's exactly what we'll be learning in today's lesson. But before we look at the process itself, let's see where today's topic fits into the accounting cycle. So let's have a quick recap on the accounting cycle. First, a transaction occurs. Next, that transaction is recorded in the journal. Then comes today's topic, posting to the ledger. After everything has been posted, we're ready to prepare the trial balance and continue with the next steps in the accounting cycle. So posting acts as a bridge between journal entries and the trial balance. Without posting, we wouldn't have organized account balances to work with. That's why this step is so important. Now that we know where posting fits, let's define exactly what posting means. Posting simply means transferring information from the journal into the appropriate ledger accounts. That's all it is. We're not changing any amounts, we're not creating a new transaction, we're simply moving information that has already been recorded into the correct ledger accounts. Think of it like organizing files. To simplify, the journal collects transactions in chronological order, while the ledger organizes those transactions by account. Now that we know what posting means, let's walk through the posting process step by step. Whenever you're posting a journal entry, the process follows the same pattern. First, look at the journal entry and identify the accounts involved. Next, determine which accounts are debited and which are credited. Then transfer the debit amounts to the appropriate ledger accounts. Finally, transfer the credit amounts to the appropriate ledger accounts. Once both sides have been transferred, the journal entry has been posted. Let's try to see how it works. As usual, we'll use the examples from the previous video so you can see how each step connects to the next. Before we begin, just a quick note. To keep the example simple and easy to follow, I'll be mainly using simplified journal entries and the accounts throughout this lesson, so you won't see every detail that would normally appear in a full journal entry or ledger account. The posting process is exactly the same. We're simply removing extra details so it's easier to focus on the concept. Now, let's look at our first example. The owner contributes $10,000 in cash to the business. Cash is debited and capital is credited. Let's post this entry to the ledger. Watch carefully where each amount goes. The debit to cash for $10,000 is transferred to the debit side of the cash account, while the credit to capital is transferred to the credit side of the capital account. Notice that the amounts stay exactly the same. The account names stay exactly the same. The only thing that changes is where the information is stored. Before we continue, do you remember the LF column we saw in the journal? And on the ledger side, we also have a reference column. Let me show you the actual format real quick so you can see how this works in practice. As I mentioned earlier, in the journal, we use something called LF, which stands for Ledger Folio. This shows the ledger account number where the entry has been posted. For example, if the cash account has account number of 101, we write 101 in the LF column next to cash in the journal. If the capital account has account number of 301, we write 301 next to capital. Now, once the entry has been posted to the ledger, we also use a reference column on the ledger side. In this column, we write something like J1. This means the entry came from Journal 1, showing where the transaction originally appeared in the journal. So in simple terms, LF in the journal tells us where the entry went in the ledger, like 101 or 301, and J1 in the ledger tells us where it came from in the journal. Now that we understand how LF and reference columns work, Let's try another example and apply the same posting process step by step. On January 3, Alex Consulting Business buys equipment for $1,000 in cash. Equipment is debited and cash is credited. Let's post this to the ledger. The debit to equipment is transferred to the debit side of the equipment account, and the credit to cash is transferred to the credit side of the cash account. Note that the $10,000 comes from the previous example. As new transactions occur, the ledger continues to be updated and filled with activity over time. Now let's see how we can use the ledger to determine the running balance of an account. One major benefit of posting is that it helps us determine account balances. Our cash account received a debit of $10,000. Later, it received a credit of $1,000. So the ending balance of the cash account is $9,000, which is 0 plus $10,000 minus $1,000. Again, as more transactions are posted, the account balance continues to update. This organized information will be very important in the next step of the accounting cycle. Now let's go over a few important things to watch out for when posting. First, always make sure you are using the correct account from the journal entry before posting. Next, remember that debits always go to the debit side of the ledger. And of course, credits always go to the credit side. It's also important to always post both sides of the entry. Every journal entry has at least one debit and one credit, and both must be transferred. Another key point is to double-check the amount before posting. Even a small mistake can affect the account balances later. Finally, don't skip any journal entry. Make sure every journal entry is fully posted to the ledger, because missing even one entry will make the records incomplete. If you keep these points in mind, posting becomes much more accurate and much easier to follow. And that's it for this video. Before you go, I got a quick question for you. When posting a journal entry, what actually changes? Do the amounts change? Do the account names change? Would the location change? Drop your answer in the comments. And thank you for watching. I'll see you in the next lesson.